Ben, a lot of gains, upward movement on that West Texas intermediate contract, then a lot of losses in different areas within the soybean complex, especially. What's your takeaway looking at the adjustments for this week?
Sure. So the West Texas Intermediate Crude Oil reacting to rising tensions in the Middle East. This is a story as old as time, I guess. Concerns about reduction in production for a major oil producing part of the world has led to a rally in this market. Last week we saw a pretty strong deterioration. You know, strong is a relative word, but we saw a decent reduction in the price of energy market due to concerns about a global recession. We saw that broad sell off in the stock market and just overall fears about the general economy. Those still exist and are kind of interwoven through the economy, but I don't think the fear is nearly as strong today as what it was last week about recession. And so, therefore, some of that demand is being added back in, or like maybe not as big of a demand destruction as what was anticipated a week ago. And then on top of that, the reduction in the addition of maybe some, or I don't know how to say this. So the smaller reduction in demand, maybe that's how I should say that. The smaller reduction in demand is more than offset with concerns about production, and that's what's leading to that higher energy prices across the board. So kind of a competing both areas there, creating a bullish picture for those energy markets. And then, as you mentioned, the soybean market has just been taking a brutal hit the last couple of weeks, really, continuing to work its way down. And we'll talk about the WASI report, but the WASI report was not friendly to soybeans on the bullish side of the picture. It was very bearish in nature, and it's going to be something that we're going to struggle with for a while.